Hello, it's John Piper with the weekend video clip, and it's Saturday the 7th of December. Looking here at a chart of the Dow. Saw this peak up here around 16,175, and you'll remember all the major trendline resistance at that level. Definitely a very critical level for the Dow. Then got a 1, 2, 3, 4 and 5. So 5 waves down in Elliott terms is a possible trend reversal, followed by an A, B and C. Now if that's a complete correction, which it could be in terms of price, this is the Fibonacci 61.8% level, then we'd expect a major pullback to start come Monday. So certainly I'm looking out for sell signals on Monday to position for that. Given the time of year, I'm a little bit cautious because obviously at Christmas time I'm expecting rallies that time of year, and I mean the psychology is going to be positive, i.e. there will be Christmas spirit, there will be New Year optimism, etc. The fact is, if it gets overwhelmed by other forces, then it would suggest that 2014 will not be a good year. So let's have a look at the wave pattern in a bit more detail here, because it does actually subdivide quite well as well. We've got 1, 2, 3, 4, 5 quite clearly there. We've got a sort of third wave there, and that would be a 1, 2, and a 3, 4 and 5. Also got a 1, 2 there obviously, and a 3, 4 there. An irregular fourth wave perhaps, and then this fifth wave to come, which actually can, I mean it looks more like an ABC, but it fits, I mean that's the only flaw in the pattern really. So that's pretty solid in that sense. A, B. The C doesn't subdivide very well, but we are bang on this level. It means we could go a little bit higher, but price is also pretty much spot on, with a decline lasting 4 sessions, but 2 of those like half sessions, so that's sort of 3 full sessions, and then 2 and a bit there. So again, it's really spot on. So again, it suggests that in terms of time, a pullback on Monday would be ideal. If the Dow manages to put on a positive effort on Monday, it will certainly deflate and dilute the negatives on this chart. We go to FTSE. FTSE also saw 5 waves down over the week, over the same kind of pattern, but it comes as part of what seems to be a correction. This is the slight dichotomy here. So whereas on the Dow we had the all-time high around here, and a clear 5 waves down, on FTSE it looks like it's part of a corrective move. But if we look at this, which we will do now, okay, here's a shorter term chart on FTSE. This is the hourly chart, and we can see the quite forceful move here. The key thing here is that the rally at the moment is not that dramatic. I think it closed around 65.75 after the Dow had closed. So a similar pattern really. If we see early selling, then I will be selling the market as well. But looking for a sell signal, it's not as clear as the Dow, but given the sharp decline, which is impulsive, and this dithery corrective type rally, it suggests the trend is still down here, even though the overall form of the move is corrective. Should just look at, so there's the whole decline off the top that I was showing you a minute ago, around 6.8. This is, you can't really count it, so it looks corrective. That's a bit dithery. It's only when you get to here that the thing becomes more dramatic. It could just be that we're going to see a fifth wave, and on Dow, of course, it could be a C wave decline. It doesn't have to be a huge move, but obviously that would also be a profit opportunity, but not in the same degree. Right, we'll have a look at the DAX now, and you can see again quite a sharp decline over the week, suggesting an impulsive move, and so far just a sort of ABC type action. So same parameters as FTSE and the Dow in fact. So right, we're going to pound dollar. If we look at this chart, the weekly chart, it looks quite negative as we are bouncing. We have major approach above this trend line, but we seem to be falling back a little bit. But going down to the shorter term chart, and we just see a very corrective sort of decline, suggesting the pound is going to go higher against pound dollar. Pound euro. This is the hourly chart. We had 1.2 as being fairly major resistance. We've seen the market come above there quite well, but it's now fallen back again, and it's been a pretty impulsive move really. There's a 1, 2, 1, 2 and a 3 down to there maybe. So more development to come before we could say it's anything too dramatic. but far more worrying than pound dollar, as it were. Or, I mean, worrying in the sense of negative for the market, as it were, which of course is positive one, negative for the other. So could be a good trade building up here. See how that develops. Finally, have a look at euro dollar. Euro dollar was looking interesting in the sense that we had this ABC already, which had failed to make the trend line, and therefore was a sign of some negativity. We then had quite a sharp fall, which we'll now look at. So a fairly sharp fall here, a bit of a 5-wave decline here. 1, 2, 3, 4, 5. Can't show this unfortunately in a shorter term picture because there's too much data, because it's a 24-hour market. Followed by an A, B, C, but it's now blipped up further. So it's still an ABC in fact, but so still before, unless it takes out this high here, around 138.20 thereabouts, it'll still look negative, but we need to see a sell thing. So again, it's a market worth watching because it could be a decent move here, given that triangle and given this wave pattern. Okay, that's all for this report. Hope you found it interesting and useful. We're back on Tuesday morning with this report for subscribers. Have a great weekend. Thanks for listening, and bye for now.